Hi, good afternoon. You're watching Closing Trades right here in ET Now with me, Aisha Faridi, Ajay Sharma in the studios as well. And the consolidation continues for the markets. If you were to just map how we've panned out from the start of the year up until now, there's not been a sharp drop, but very slowly and gradually the market has drifted lower for sure. And today is no different. 120 points lower as we speak right now, 21,667 on the futures. And it's really a mixed bunch out there in terms of what's been dragging the market lower. I mean, if you were to pick out the weakest link, it's got to be metals amidst the large caps, textile, chemicals, FMCG, banking as well are in the red. And it's really infrastructure led by some of those Adani names, the GMR Infra included in that bunch. They are the ones which are actually holding out. But if you were to take a look at some of the actively traded buzzers today. Look at GMR Infrastructure, the stock that I just flagged off. That's on a tear right now. About a 6% move is what that stock is seeing on the futures, holding up over 4%. There was, of course, a block deal as well earlier today on this one. TVS Motors has been a very steady ship as well. A good 3% move here. Tumbles Fertilizers, Manappuram, JK Cement. So really, you can't draw up any sectoral trend per se amidst the actively traded stocks. But Ajay, as it comes to it, a whole host of brokerage upgrades, Q3 updates, that's what the stocks are reacting to.
In fact, I'd like to just flag off two parts of the market which are weak on Friday, and that is continuing today as well, which is Reliance Industries and HGFC. Together, they have almost half the weight of the index, almost 1/3 the weight of index. Look at Reliance, almost days low, trying to recover, but a feeble one. HDFC Bank is also pretty weak today, and this after they've posted very strong 5% kind of a sequential growth in their Q3 updates, but at days low. So that is actually hurting the index as well as the Bank Nifty. Look at the Bank Nifty. Not only HDFC Bank, SBI, Kotak Bank, all of them are slightly on the weaker side, and that is why the entire basket of the large cap universe is coming under pressure. What is also interesting today is that the broader markets, there is absolutely no attempt of recovery. The mid caps, small caps are also bleeding and are taking a cut of almost 1%. So last week we saw outperformance from Indian market despite a weak global cues. But today we are buckling under pressure. We opened to a weakish Asia, and overnight, over the weekend, the cues are weak, and we are also coming under pressure. But Kunal, this is a kind of a very expected correction which is panning out, right? We were expecting a correction after we hit 22K, and that is exactly which is happening. So which means, will we find support at 21,500 or thereabout, or people will still open their shorts, keep their shorts open?
I think people will still keep their shorts open. I'll still believe that there should be maybe another 500 to 700 points drop at least on the Nifty.
Interesting.
So which means we should be at 20,700, 20,600. That's where I would probably anticipate the Nifty to head towards. Because what's actually changed, two important stands in terms of the technicals. One, on the charts, we've seen a breakdown of a critical indicator support on the RSI for both the Nifty and the Bank Nifty. This has not has a resultant effect on the prices so far, but then eventually the prices, they tend to get back into line with how the indicators shape, and I think that would probably be one of the major reasons why you may see maybe one more round of a sharp sell-off into the indices in the next maybe few trading sessions odd. And the other and the most important part is the built-up of short positions, which was very evident on the banking index futures or the Bank Nifty as well as in the Nifty futures over the last 4 or 5 days. So even though we were stuck into this 300, 400 point range on the Nifty and some 500, 800 point on the Bank Nifty, there was evidence of call writers as well as short positions on the futures. And that is also one of the major reasons why people will hold on to their short positions.
Interesting. Another 500, 700 points, Kunal. So what's going to drag us lower? While, like Ajay just flagged off, HDFC Bank and Reliance in any case have been underperformers.
No, but actually I think the other one which is actually weighing heavy on the market is ICICI Bank, because so it's the stronger getting weaker and the weaker stock getting more weaker.
Weak as it is weak, but even the stronger is getting weaker.
Even the stronger is getting weaker, and the weaker one, which was ICICI Bank, is still getting a bit more weaker. Today the stock is, I think, down to 2.5% odd.
Yeah.
So that itself tells you the story as such.
Okay. Let's welcome on board Sudeep Shah as well on the technicals. We've got Mahantesh Sabara joining in on the fundamentals right now. Sudeep, before I come to you, Mahantesh, just a quick word. Do you sense that we are headed in lower? I mean, Kunal is predicting another 500 to 700 point fall on the index.
I think the union budget expectations are getting built up, and that's probably eating onto the market's minds, because we have already reached quite a bit of a high in terms of the stock market performance. The entire last calendar year, the the returns have been quite superb. The overall market was plus 20, over 20% plus, and you had the small cap, mid cap doing wonderfully well in upwards of 40% and thereabouts. So the weakness was in the minds of the market. That's probably what is happening. And now the union budget expectations are building in.
Wondering, Mahentesh, afternoon, Sudeep, you as well. What exactly are you referring to when you say union budget expectation? Is there a fear of some added tax or some capital market related kind of announcement?
Not really on the added tax or capital markets related announcement, but probably the fiscal consolidation expectations will go for a toss because it's going to be a budget year, and therefore there will be a drain on in terms of expenditure, which could lead to pressure on overall interest rate environment for the entire economy, and that's why you're seeing that some of the banks are actually underperforming.
Sudeep, what about Bank Nifty? If indeed 500, 700 point fall we are talking about on the Nifty, what kind of proportionate damage could happen on Bank Nifty? But before that, are you also on the camp that we could get weaker from here?
Yeah, good afternoon, Ajayji. See, what we are seeing is that we can get weaker, but I feel the weakness in Bank Nifty could be approximately up to 46,600, 46,800 on the downside, especially the same zone where Bank Nifty had taken support around on 21st of December. So we might break that zone plus minus 100 points and then start rebounding from there. So there is a pending gap also which was left in the first week of December around 46,600, 46,800. So we feel on the downside in the next couple of days we could fall another 400, 500 points or 600 points in terms of Bank Nifty closer to 46,800 and then start consolidating from there, and then from there we will take the next view. But at least a fall till 47,000, 46,800, 850 zone is on the cards. That's what we feel. Because in the last few days, if you see, 48,000 call writers, 48,100, 48,200, all these strike prices, despite in the last 2 days, Bank Nifty rebounding from lower levels, they were still holding fort. They had not given up their positions in terms of aggression also. So the call writers were quite active, and with today's fall, what in Bank Nifty has done is that it has even breached firstly the 13-day exponential moving average, which was placed somewhere around 47,800 on the spot, and again the 20-day EMA also, which was placed around 47,500, that also has been compromised just now. So I feel there could be some consolidation and selling pressure at higher levels, which could be visible. And any long positions in Bank Nifty from here on should only be taken if Bank Nifty on spot crosses above 47,700 and it closes above that. Till the time, all rises could be met with selling pressure at higher levels.
Quite interesting. Let's just take stock of what else is happening in the market and what's looking weak, while of course, like Kunal flagged off, there is ICICI Bank, which has been under pressure today. But look at what's happening to an M&M, that's also down 1.5%. SBI is down 1.5%. And of course, IT is also buckling under pressure ahead of the earnings this week, that is. But Mahentesh, you think much of the negatives are already in the price and there is actually scope for outperformance? Should there be an inline performance from any of the IT majors?
Yeah, the IT majors downfall seems to have been overdone right now because all the negatives seems to have been factored in the IT prices. We have had this issue about employees, overall employee headcount not growing, weakness in terms of executions, order execution, while the order book is really very strong. And then you have this seasonally weak quarter, which is coming in right now. But having said that, the way the IT sector has fallen suggests that probably much of the negative news are already factored in, and there's nothing much to look forward to in terms of further negative news. If that's the case, there will be a sigh of relief that will come from the markets, and you could potentially find the IT sector actually outperforming the market ahead.
Mahentesh, what are your views on HDFC Bank? Despite our very reasonable kind of a growth on the Q3 update, 5% sequential growth on that base, but the stock is just not responding at current level, do you see value or do you see value lower?
I think it's a mixture of events that has caused this underperformance on HDFC Bank overall. Okay, and within that mixture, one cannot wish away what's happening to the banking sector per se. The banking sector is now on a high in terms of credit growth number. The YOY credit growth number is upwards of 16% thereabouts. In fact, the recent tick numbers were closer to 20%. So there's a large base effect that's getting built up, and you cannot expect the banking sector to grow further over this base. So that's probably one dampener. The second dampener I talked about is the budget might indicate again a fiscal deficit which is not controlled like we've had in the recent past due to COVID. There was a reason for the COVID related fiscal deficit being not under control, but now even this year could potentially be not under control. So that could put pressure on interest rates. And as it is, the deposit growth rate for the banking sector is very weak. These events combined with what has happened with HDFC per se, which is the merger process that has brought in situation where they have to cut back on certain avenues of growth that they had. The separate entities would pursue their, that is HDFC Limited and HDFC Bank would pursue their separate course in terms of business growth. But now the HDFC Limited entity being back into the bank puts in more regulatory kind of overhang over the entire business structure for HDFC Bank per se. So I think this is still not over. And then you have a further situation that says that FII or FPI inflows are weakening now or are likely to weaken ahead, at least for the first few months, with the Fed starting to signal rate cuts. That being so, HDFC Bank being a very large bank held by most FPIs would mean that there could be an element of outflow pressure that is coming on. So these confluence of factors is what is causing probably the bank to underperform right now, in my assessment.
Sudeep, what's your reading on the charts of HDFC Bank? Because it's really struggled to actually recover anything, not just last year, but even now.
Aisha, see, if we see HDFC Bank, its daily and weekly chart, see, this stock had been outperformer right from 8th November, I guess from the time it crossed its 20 or 13-day exponential moving average. And from that zone of 1500, it had a one-side rally up to 1700, 1720, and along with Kotak Bank. And this was the time when Axis Bank and ICICI Bank did not perform. And single-handedly, both these stocks, HDFC Bank and Kotak Bank, pulled up Bank Nifty from lower levels. But from in the last 4 or 5 sessions, what we are seeing is that it's just going sideways, and some selling pressure from higher levels is witnessed around 1700 to 1660 right now. But overall, I feel that this zone of 1645, 1650 going forward could act as a strong support. There's a pending gap also which was created on 13th December. And even if you see the options data at the money, put writers are also holding strong. So I feel another day or two, but HDFC Bank could make a temporary bottom somewhere around 1640, 1645. And then we could see consolidation and for post that there could be some rise, because HDFC Bank is kind of, I guess, completing its extreme short-term correction maybe today or tomorrow, and 1640 would be the most crucial number that we should be watching out for.
There are some important flashes coming on your screen from Coal Ministry. These are in line with remember the commentary coming in from Coal Seki himself on our channel just about 3 days back. Aims to produce about 183 million ton of coal during 86 and 186.6 in FY25. Mentesh, Coal India has been a terrific performer for the last 1 year. In fact, even on fundamentals, I was reading that they've not only met the entire FY24 production target in the first 8-9 months itself, but they've also hiked their next year production targets. Almost 75% return at 380. Do you see further up move possibilities here in Coal India?
Why is that the Coal India's production targets are getting exceeded? Is the reason is very clear. We have had weak monsoons. As you would know that when the monsoons are really either normal or excess, Coal India has a difficulty producing coal during the monsoon months because some of their mines get flooded and there is no way they can produce excess coals during that time. Since the monsoons were deficient, we've had a situation where coal production was better than what it was previously. So that's not a surprise. But that also tells you that because of the deficient kind of monsoon, we'll have more thermal power production ahead. And that really, again, augurs really well for Coal India because now they are geared up for the thermal power production ahead. Having said that, there is another news that keeps coming in and going out, and we are not very sure about is that the ministry wanted some kind of benchmark to be set as far as coal prices are concerned. Probably looked at international benchmarks and tie the prices of coal from India and Coal India particularly to those international benchmarks. If that really happens, then the price volatility that were associated with e-auctions earlier, sometimes which were favorable for Coal India and sometimes not, would probably go away. And we are like gonna enter a cycle where power rates per se are likely to be up as we approach the summer months, and that could again would come back in the form of coal prices, or there is a headroom that will be available for coal prices to be raised. So all these factors have contributed to the way the stock has performed. Not just Coal India, you would notice that most of the powers related stocks and NTPC or Tata Power or the likes have all really done well in the past year or so. And therefore it's the sector's call that one has to take. My belief is now that once the summer season is over and if monsoon predictions are back to normal, we'll probably have some of these stocks derailing.
Okay, Mantesh, great to have you on the show. Thanks as always for taking the time out. In fact, we're going to take a very quick break on that note, but still, since we're on the subject of coal production, here at an excerpt of our conversation with the coal minister himself.
Even if you produce the by renewable 50% of that, remaining 50% has to be taken care of the regular, that is thermal power. And with this thermal power also, how we should go for the sustainability, that is the challenge before us, and we are already working on that. For example, sapling of the maximum trees and using the mined water, all such things we are doing it, and also using the technology, coal gasification, using that because ultimately coal is available with us, and we are not able to meet out the entire demand through other sources. Along with government companies, we are trying to involve the private sector also, because the government companies has got their own limitation. But still they have done well. I congratulate Coal India and other PSUs. And at the same time, we cannot depend on one company, one source. That's why we involve the private sector also.
Right, Sampath Reddy, CIO Bajaj Alliance Life, is also joining us to talk more about markets. Sampath, afternoon. Thank you so much for your time. Sampath, the correction which is kind of overdue in the market, how much would you subscribe to the fact that correction in India from here on would be shallower and swifter? Look at the kind of SIP data. Today too, we saw almost the SIP data nudging the 18,000 crore, almost 17,600 or thereabout. We're almost there. So this regular flow, domestic investors may keep corrections shallow and swift. Or do you think that the impending correction could be on the deeper side and valuations are expensive?
Right. I think as you recall, 2023, most of us were fearing about the recession, but that really didn't happen. In fact, the US GDP has grown quite strongly in the last calendar year. And good thing about as we at the beginning of this calendar year, what were the worries and headwinds at the last year was not really there at all. Inflation was a big worry about a year back. Now that seems to have been at a comfortable level. Interest rates kept on were going up, and now interest rates have already peaked, and Fed seems to have already paused and pivoted also. So with these, with these macroeconomic trends, large part of the headwinds which were there about a year back are totally absent, and probably we are from a macro perspective positioning quite well. And the earnings growth also have done quite well in the last, and I would say, couple of years. Earnings growth has been quite robust in India. All of this have pointed out to quite a good, robust equity market performance in the recent past. I mean, from here on, what will really drive the the market? I would think largely the earnings growth will be the driving guiding factor for the market. And for the time being, FY24, so far the earnings growth has been quite good, and full year, its expectations are about 15 to 16% kind of earnings growth. And the next year also the growth expectations or estimates are quite good, around 14%. So in this backdrop, there's not really much of a headwinds for the market from a macro standpoint. It's just that the valuations are on the higher side. Only because of these valuations, I would probably think that the corrections, if at all, in the current calendar year or the near term, would be a lot more. I would think shallow ones. It would be yes, some kind of a time correction could be there. But by and large, I think 10 to 12% return in the from equity markets even this year is very reasonable to expect. Even the valuations also, if you see around 20 times 1 year forward, vis-a-vis last 5 to 6 years average, we're not really that expensive. We are used to seeing this level of valuations in the recent times. Of course, if you see probably last 15-20 year average, PE multiples, we are on the higher side. But in the recent times, if you see, these multiples have been there for quite a bit of time.
But Sampath, there's got to be some bottom-up story out there, or spaces or individual cases where you think the growth runway is visible for, say, the next long-term foreseeable future, etc. Any themes that you may have identified?
Right. I mean, it is not really a big new sector per se, but within the larger sectors that represent the market, Nifty 50 or the top 100 companies, BFSI has not done particularly well in the last calendar year, I would say last 1.5 years. There, the valuation looks very, very attractive. And, the sector dynamics also looking quite good. Credit growth continues to be robust, upwards of 15%. And the NPAs are at a multi-year low, credit costs are at a multi-year low. And the valuations, if you see in the banking space per se, they are much more attractive vis-a-vis its own valuation in the last 3 to 5 years. So that sector looks quite good. And we also like, pharmaceutical, especially the generic pharmaceutical export companies. There are, the pricing pressure, which was a major worry, and also US-related plant issues, which were a major worry. Those seems to be behind now. And the demand supply is, very well positioned in the generic exporters. We see, we keep reading about a lot of shortages in the US in terms of generic drugs. I think, and not only that, even the valuations of all these generic exporters have been quite reasonable. So that sector could also, do quite well in the very immediate term. Apart from that, the sectors such as auto and cement are showing good growth in earnings. These will also do well. Probably only sector which is slightly, I would say, lagging behind in terms of growth and as well as on the valuation side. IT is a sector which is, I think, still facing some headwinds in terms of growth. And the valuations are also slightly, kind of growth expectation which are there seems to be slightly on the higher side. But apart from that, most sectors looking quite attractive.
Let me, talk about a sector which is very ignored right now, and rightfully so. The numbers have been extremely weak, and that is the QSR space. Westlife, which is McDonald's, last 3 quarters numbers have been weak, despite of them sharing a ambitious 5-year plan. Look at how Restaurants Brands Asia or even Sapphire Foods has been sulking. Are you seeing any signs, for these kind of stocks to this category to pick up in coming months?
I mean, this is for these sectors, especially the QSR, all the names that you mentioned, the brokerages, regularly checking the feedback on the ground, and seems to be that demand growth for these sectors. These companies are not very robust, but we like the space quite well. I mean, it is not just, the next 1 quarter, 2 quarter story, but next 5 to 7 years, they will, all of the names that you mentioned of the segment companies in that space, I think will show very good earnings growth in the next 5 to 7 year perspective. Yes, it is possible currently that they may be facing the headwinds in terms of demand growth. But I think long-term potential for these names is very, very robust. I think the way that the next generation or younger generation, the kind of travel that we are witnessing, the food habits, all of this is points to a very long-term sustained growth opportunity for these names which you mentioned. I think we like that sector, even though current immediate outlook doesn't seem to be very promising, but long-term outlook looks very, very good. In fact, some of these companies which are sort of, I think, emerging sector, I would say, companies which are which are of more of a new age kind of businesses. It's good to buy them when things are slightly going slow down for them, because that's when you get them relatively attractive. Otherwise, most of the time, these companies used to trade at a very, very high PE multiples. So, we particularly like the sector from a long-term
point. In fact,
yes, we agree that in the near term there's a challenge.
You have a very valid point, and Aisha, the reason this space came up on my screen is that when I speak to, say, Restaurant Brands Asia, you look at the annual report, or even Sapphire, which is doing very bad, got hit by the Sri Lanka issue. These guys have not reduced their store addition run rate. Despite of the weak same store sales, they are actually rolling out store after store after store. And how many Burger King restaurants are there in India right now? 600. In China, there are 6,000. So that's the upside kind of.
And we're a larger population.
Much higher growth, right? So I was looking at in this space. So I was wanting his view on that one.
I don't know, Ajay, that's also telling you that there's higher need for pharma and healthcare too.
Clearly, lifestyle
that's the
diseases,
consumption pattern we're headed towards. Sampath, any opportunities there?
Yeah, pharma, as I said, we like the sector quite well, and within that, domestic pharma is always doing quite good in terms of growth wise. The drag there in the pharma was basically the export oriented generic exports. Even that seems to be totally bottomed out, and like that generic exporters in the pharmaceutical space now.
That's the take coming in pharmaceuticals right now. Can't take your eyes off from what's happening within HDFC and ICICI Bank. They're the ones which are cracking quite hard and actually rubbing off on the overall market. Even SBI, for instance, that's also down a good 1.5%. We're pretty much at the lowest point in the day as we speak right now. The weakness has now percolated to names like Axis as well, which is down a good 1.5%. And the weakness has only gotten more acute in the last 15 odd minutes or so. So that's pretty much the texture of the market right now, largely led by banks and heavies like Reliance Industries. That's really been dragging the markets lower as we speak right now. But Sampath, what about the underperforming end of the market, IT? Do you think the pessimism is already in the price, barring, of course, the few odd shining stars out there like a Persistent, HCL Technologies or a KPIT, etc.?
I think, within that IT, relatively the names that you mentioned, which are small and mid-cap oriented IT services companies, there, in fact, the valuations are much more on the higher side. If at all the valuations in the IT, the valuations are much more favorable or attractive in the larger 4 or 5 names as compared to the mid and small cap IT oriented names. Our approach to the IT is, more towards stay put with the larger name, because there the valuation comfort is much better. And even if the slowdown were to persist for slightly longer, these bigger companies will be able to do better. So that's what we had seen in the past as well. So in the IT space, right now the growth challenges are clearly there, and the valuations are also, especially in the mid and small names, on the much higher side. If at all, our exposure is largely in the top 4 or 5 names, mainly on account of valuations.
Sampath, have you started nibbling into some of these this specialty chemical or agrochemical space? They are also going through a very rough patch, and in the middle of all of that, while we are scratching our heads whether things are bottoming out, the largest one of the largest companies comes out, and the promoters want to raise their stake via rights issue. How would you read these signs?
Right. I think the chemical exporters, I think that segment has done very well in the last 3 or 4 years in terms of growth and profits. We really fail to understand what exactly drove such a sharp improvement in the profitability over the last 4 or 5 years. I really also do not know what is actually bringing the profitability down right now. Not sure how and when it will turn around, and whether what we have seen in the last 3-4 years of stupendous profit growth in the chemicals is whether it's a one-off or structural. I mean, I'm really not on top of that. Because we're not able to figure it out why, how it happened. Probably we will stay away on the chemical sector. We continue to stay away from the chemical sector as of now. I mean, I would still think the valuations are on the higher side unless we believe that profit growth that we had seen in the last 4-5 years, really structural because of China plus one or etc. I'm not confident about that, being whether the turnaround that we had seen in the last 4-5 years is really structural. Because of that reason, I would still say, I mean, at this moment we are, not there in that space.
Coming in and what's really happening with the specialty chemical space right now. The other thing, of course, is that the global markets as well are looking a little bit wobbly right now. Sampath, we've been asking most of our experts that this year you've got two big events, which could be market-moving events. A, of course, our own domestic elections. And then in the second half, you've got the US elections as well. At large, would you think the market is going to be a little bit on the sideways and we're not going to see a replication of what we saw last year?
Right. I mean, last year was a big surprise for most of the investors. It was like widely accepted that 2023 is going to be a recession year worldwide, and especially in the US. That really didn't happen. Having said that, most of the headwinds also now, which were there about last year, now probably turning, as a tailwinds, with the interest rates coming down, inflation benign. We do not argue for a sort of any correction or a sideways market much. The two big events that you are mentioning usually is, during the election year, usually the consumption or investment activity generally stay relatively elevated, and even even the interest rate outlook point of view, do not see much of a tighter monetary conditions during this election year. These two events I do not really see as a negative events for the market. If at all, they could act as a positive catalyst. I'm not really sure, what's happening in the US election, but the way the state election results which have happened recently, it looks like we could have a stable government even post 2024. So these two events doesn't seem to be much of a risk. In terms of macro point of view, there are not really any headwinds which suggest for a deeper correction in the market, except the valuation per se. We had already seen sharp rise in interest rates over the last 1 year. And we had also seen two wars. In the one is in the Middle East and the other is in the Europe. In spite of all of these things, markets have done quite well. So these two events per se, I don't think is really a challenge for the market for the coming year.
Okay, Sampath, great to have you on the show. Thank you so much for taking the time out and joining us today.
Thank you. Thank you.
Okay, pretty much around the lowest point in the day. It's a good 1% crack that you've seen for the index. We're down 200 points now for the futures, 186 points gone for the spot Nifty, just about defending the 21,500 mark. Kunal, any closing ideas you may have?
So I'll look at shorting HDFC Bank even at current levels, and I think at 1665.70 approximately, where the stock is trading right now, it's still forming a bearish head and shoulder pattern on the daily chart. So even with the weakness of the stock over the last couple of days, I would still believe that it's a good shorting opportunity.
Okay. Sudeep, any ideas that you may have for the last half hour of trade?
Yeah, so there's one long and one short side idea. So the first, let's start with the short side idea, that is UPL. Now, UPL is in a long-term downtrend. It even if you see the last 12 months chart, it has steadily fallen from 780 to 540, and thereafter it rebounded to 600 kind of levels. But in the last few days, once again, we have seen selling pressure from higher levels. Last 4 days, lower top, lower bottom pattern also has been formed, and the stock has breached its 21 December swing lows also, which is around 565, 568. So I feel at higher levels, UPL could be shorted around 560 to 563 levels with a stop loss of 572, and targets on the downside could be placed around 535, 540. Now, the second stock which I like on the long side is HDFC AMC. Now, last few days we have seen this stock has been in a steady uptrend. All dips have been bought into the stock since 13th November or 15th November has not even breached its 13-day exponential moving average, the shortest one. And on every dips, the stock is facing, the stock is getting support at lower levels. So I feel from the current levels also, as we speak right now, the stock is outperforming. And I feel next couple of days, the stock could head towards 34.50, 34.70. And one can buy this with a stop loss of 32.90 on the downside.
Yeah, so that is a call coming in on HDFC AMC. We'll take a short break, but before that, there's a lot of talk. In fact, no, why only talk? There is a massive amount of footfalls in specific regions in the country, especially around religious tourism. We've seen what happened in Kashi. We saw what is happening right now in Ayodhya and some others as well, Ujjain last year. We spoke with a bunch of real estate developers who are actually benefiting and are participating in that phenomena. And here's a slice of those conversations.
We just heard that there is so much potential out here. Hotel rooms are in short supply. Imagine if that's in Varanasi, what the condition in Ayodhya would be. Yeah. And there's tremendous potential, right? So a few of the developers from tier 1 towns also kind of had a on the side discussion and said how can we add value to that location to make it a lot more. We do understand the Ayodhya temple is going to be a big tourist drive, and 6 crore tourists visited Varanasi last year. So that itself should tell you the kind of potential that lies in all these places. With the growth that comes, I believe our businesses stand to gain, and we are totally aligned with whatever it is that would add value to the vision of the government, at the same point of time add value to our fraternity.
The tier 2 game is very much the highlight of the new India that is going to position and going to go forward. And it's not just the tier 1 cities that will take the city or country forward. It's the tier 2 and tier 3 cities where we see the population, the demographics changing from into a middle income category and service sector, with India being a very service sector oriented country. I think it gives a lot of potential for developers to start looking at tier 2 cities. We as a group, Brigade, we've been in the tier 2 markets in southern cities like Mysore, Kochi, and a little bit in Trivandrum. But we see this only growing strength by strength, and ultimately you're providing housing for all, and our motto is to provide that to every individual. Let him have the dignity by owning a home. I think that's the underlying factor.
Varanasi, definitely it's the oldest civilization, and people say that this city is the oldest city of the world. So that's why we have chosen the Varanasi, and the season, everything, the food, the hospitality, everything is good in Varanasi. Affordable housing is growing since last 10 years. They are growing quite well. And now premium market is also growing. So the premium market has outnumbered affordable housing market. That's why we are saying that affordable housing market is not growing. But affordable housing market, as per my data, they are going at 10 to 15% rate.
Back with closing trades, right here Nifty now just about defending that 21,500 mark, or Kunal, did we already breach it? We breached it, okay. So where's the next support then?
If you ask me, another at least 700 points lower.
Immediately?
Yeah, that's the first level of strong support for the index.
Okay, brace yourself. Seems like we're going to have some shaky few days coming up, as per Kunal at least. But let's also highlight some positive news flow, and mutual fund SIP flows have yet again come in at a record high. They've topped that 17,000 crore rupee mark for the second time. In fact, my colleague Sharad is here with more details on the same.
The AMFI numbers for the month of December have been very strong, and the SIP numbers are coming at the record high levels of more than 17,600 crore rupees. Now, interestingly, this is the second straight month where the amount has gone past the 17,000 crore mark. Another interesting data coming in is, for the first time ever, The closing AUM of December has crossed the 50 lakh crore mark. Now this AUM includes the equity as well as the debt segment. Also importantly, the focus would be there on the small cap funds where we are seeing record inflows happening, and roughly for the 12th straight month there has been strong inflows coming in. Also, if you look at the overall outflows, that has come down to the negative because of the debt schemes which impacted the outflows. And also importantly, if you look at it, the largest inflow has happened in the sectoral front. In the equity segment, roughly 6,000 crores of inflows have been recorded. Apart from this, focused TLSS funds have shown outflows, but strong inflows still coming for the 4th straight month when it comes to the flexi-cap funds, and for the arbitrage funds also there has been a 9th straight month of inflows coming in. Now overall, if you look at it, the NFOs added roughly 10,000 crores in the month of December with more than 21 launches coming in.
Right, Sharad, we'll leave it at that. In fact, let's welcome on board the CEO at Amphi as well, Venkat Chalasani, joining in on the show right now. Venkat, hi. Great to have you today on ET Now. The SIP numbers are above the 17,000 crore rupee mark and, you know, at record high levels once again. How's the investor confidence looking like right now?
There's a continuous flows that are coming. If you look at when compared to the last month, which was 17,000 crores, now it is 17,700 crores nearly. So if you look at the number of the total number of the people that we have invested also have crossed around right now. During this particular month, we have 40,32,000 people who have got registered in the SIPs with a net addition of 19.52 lakhs. So we are seeing continuous growth in this, and the confidence of the people on the Indian economy is continuous, and the SIP numbers are growing constantly. And just to put a small number, the total AUM under the SIPs have touched 9.96 lakh crores as we speak now, as on 31st of December 23.
Sure. And equity flows, they've come in at a 2-month high. Even small cap inflows have been strong. What's the reason for the same?
One of the important things that we are looking at, as you rightly mentioned, there is a positive movement towards the small cap. In mid cap, we have seen a slight degrowth when compared to what it was last month. The growth numbers were much better in the last month when compared to this particular month, although there is a positive growth even this month as well, but compared to the last month, there is a slight degrowth. People still have confidence in the economy, the way it is growing, and therefore the movement of the funds is coming into this particular segment. And more importantly, one of the things that we would like to emphasize here is there is a continuous investor education program that is happening. At the same time, there are proper risk mitigants and risk controls that are being put in place by all the AMCs wherever and whenever they see the risk. So the risk management framework is in place with the AMCs. At the same time, the continuous investor education program is happening as far as the investment goes. So there's a two-pronged approach, and we do see continuous flow because of the way in which the Indian economy is responding, and the GDP numbers that have come the other day also does reflect what the state of economy as we speak now.
Right. Okay, Venkat, great to have you on the show. Thank you so much for that quick reaction coming in on the way the SIP flows have been. For the market, of course, we've gotten acutely weak right now, and it's standalone banks which are really dragging the markets lower, not just the large caps. Look at SBI. It's now down 2.5%, and that's a 1% fall that SBI has seen in just the last, I think, half an hour or 20 odd minutes or so. So SBI is quite a bit of drag. There's, of course, HDFC Bank and ICICI Bank, which we've been highlighting, have been quite the weak links from the word go today. HDFC Bank down about 1% fall coming in ICICI Bank as well. And look at the smaller ones. BOB down 5% right now. Bandhan Bank is down 7% as we speak. These intraday graphs will just come for you on your screens. There you go, 4.5% fall there and 7.5% lower now for Bandhan Bank as well. Kunal, what's the call on the Nifty Bank? Because I think that's where we should be discussing support levels as opposed to the Nifty.
Well, yeah, and I think Bank Nifty is actually broken a double top formation. So it's technically considered to be more of a topping formation. at least on the short-term charts. It's almost like a 1500 to 2000 point kind of a formation for Bank Nifty. And I think today if we close below this 47,500 mark on the spot levels, we could be looking at a drop of at least another 800 to 1000 points on the Bank Nifty, just purely based on this pattern for the banking index. And that's what we were discussing on the internals, that the weakness on the large cap names like HDFC Bank, ICICI Bank has clearly been a bit more pronounced. And now you've seen the weakness trickle into the other formidable names like SBI. Today's come back from that 650 levels where it was consolidating towards 625 odd mark. So you have many of the other large cap private and the PSU banking stocks also coming under some selling pressure. So there's bound to be more of unwinding of positions first and then maybe built up of short positions, which could take the indices as well as many of these stocks lower.
Sudeep, any fresh shorting ideas that you may have amongst the banks? And I mean, I'm just looking at the smaller ones, Bandhan, BOB, they're the ones which are falling harder.
Yeah, so see, a couple of them on cards right now. If we see the first one, apart from Bandhan will just touch base in a while. Federal Bank, if we see, Federal Bank was in a consolidation range between 153 and 158. But today we have seen that stock also break down below its consolidation zone, and right now it's trading below its previous swing highs of October and I guess September and October. So now I feel that major moving averages also have been broken. So on Federal Bank till 156, 155 levels are not crossed. This stock can head towards 143, 141 on the downside. And Bandhan Bank also now. Bandhan Bank, it's like in the last few days we have seen a swift move from 240 also to 265, and again in two candles the entire move has been engulfed, and that means that the sellers are right now dominating. And if we see the chart of Bandhan Bank since last 1.5 years, the stock on every major rises has have met with selling pressure. So I guess once again the sellers have won, and from the current levels also, if you see till 240 to 42 levels are not breached on the upside now. Once again, till that happens, lower levels of 215, 213 could be on cards. So the stock could retest its November as well as October swing lows, which are placed around 212, 213 levels.
Okay, just 3 minutes left to go, and the weakness is only getting excruciating. Reliance, of course, has been quite a drag. L&T has drifted into the red. You've got Tata Motors now in the red. Titan, after its Q3 updates as well, has fallen through into the red. There's Bajaj Finance, HDFC Life, Maruti, Cipla. Most of these other stocks as well are now drifting into the red and closing in the week. But Kunal, any BTST trades that you may have?
Yeah, a few STBT trades over here. So the first one which I'm suggesting is sell on HDFC Bank. That stock looking weakness, forming a bearish head and shoulder pattern. So targets of 1625, stop loss at 1700. And the second would be a sell on Berger Paints. That's a stock which has also shown signs of a triangular formation breakdown. So would suggest a sell with a target of 560, stop loss at 590.
Okay. Sudeep, would you also have an STBT list as opposed to BTST?
Yeah, see, one stock which I feel right now is breaking down is M&M. Now, M&M was in an uptrend till say late December, but last few weeks we have seen double top formation over there, and now I guess the breakdown is below 1630. So the M&M can be shorted at current levels also with 1635 as a stop loss. And on the downside, targets which can be seen in M&M would be around 1580, 1585 levels.
Okay, let's begin winding up for the day. Kunal, Sudeep, both of you, thanks as always for joining in. In fact, let me hand it across to Vinny and sum up what's been quite a weekday, Vinny.
Absolutely, a weekday that has come in for the markets, managing to hold on at one point of time about the 21,700 levels. But look at the Nifty closing below the 21,600 levels. 21,500, it did go below that level at one point of time. 21,492 was the lowest level, down 200 points for the day. Even the broader markets, nothing held up on that front as well, especially coming in on the Nifty mid-cap front also. That was a laggard today versus the benchmark indices as well. Nifty small cap, on the other hand, actually managed to still hold on ground compared to the broader markets in terms of the performance for the mid cap or the benchmark indices. When you look at the Sensex also, that is also down more than 600 points as well. So yes, that was an underperforming day that came in from the benchmark indices today. The bank index, the Nifty bank, that also was clearly seeing a bit of a weakness coming in. PSU banks also among the top sectoral loser. Other than that, we've seen the Nifty FMCG dragging and lagging in trade today. So that was not anything great in terms of the overall performance. What held on to some bit of a green today was the Nifty Media. So you should pull up that Nifty Media managed to hold on to green in this weak market. Holding on to some spot of a green was Nifty Media, up 0.3% in trade as of now as well. So banks, FMCG, clear weakness that we saw coming in on that front. Other than that, let's look at some of these individual stocks that performed in trade today. Nykaa, in-line numbers that came in terms of Q3 operational updates. So yes, Nykaa managing to hold on to some bit of the green at the end of the day as well. Other than that, when you look at it in terms of Marico, GCPL from the FMCG pack did nothing great in terms of Q3 updates, and that is why Marico as well as GCPL both were seen underperforming in trade today. Marico down almost 3.9 to 4%, while GCPL also down 3.7% in trade. Other than that, Bank of Baroda too, a weak Q3 update came in from this banking company, and that is why down and out in trade was Bank of Baroda, down more than 4%. Let's move on, look at some of these individual movers in terms of today's news flow. Tumbles fertilizers that held on to gain, saw a sharp spike up coming in mid of the day after the company has actually approved a buyback of equity shares of around 700 crore rupees. On the back of that, some bit of a green for Tumbles fertilizers, 1.5% uptick there. Other than that, Aarti Industries down and out. Skipper Limited also actually saw a strong gain coming in today as well, and Federal Bank, DLF among some of these movers in trade today as well. But with that, let's wrap this edition of Closing Trade on ET Now. It's a goodbye from Team ET Now.